G'day everyone, welcome back to Pete's Investing. Today is April 10, 2023. This is the spot silver price update. On all three timelines, the daily, the 4 hourly and the hourly, we're in a long positioning, so only long trades predominantly. Although just be mindful, we're reaching this key resistance area on all timelines, and it's sort of consolidating up there, and I'll drill down to each of these to get more clarity. So I've drawn this support and resistance lines. Here are key support resistance lines on the daily, but you can see there it's made a nice little advancement to the upside from between those two support resistance lines. But I've also drawn these two diagonal ascending trend lines, so just be mindful it may well continue to the upside but come back down and consolidate and bounce in that range for some time. Now on the 4 hour time frame, I've also drawn this diagonal ascending trend line, which is separate to the other ones. I'll just drill out. They're the two other ones I drew on the daily, and this is the one I've drawn on the 4 hour time frame. Now that was drawn back in during this period back here, and the reason for that was just give you a bit more clarity in terms of trading ideas. Well, let me go through the hourly chart first, and I'll come back to this. But basically, we were tracking up along this, and that would have been a nice opportunity to go long. And I'll explain to you where that would have been ideal to go long in a minute. So let's, and also on the 4 hour time frame, just be careful. We also had this descending bearish divergence on the CCI, very minor divergence, versus a bullish divergence on the price chart. And actually, when it broke to the downside, according to the CCI here, that would have been an ideal place to go short. So just be mindful of those little indicators when they do show you divergence. On the hourly chart, we've got the same signals here, and again I've got this diagonal trend line. Now what I was going to show you was, I'll show you on the hourly, back here I had the Fibonacci retracement drawn from between that low and that high. So the ideal place to go long would have been when it broke the 61% level at this point there. That's always a key area of Fibonacci retracement. So if it goes up as high as you can see here, if it goes up as high as the 23 or the 38% or even the 50%, you can always bounce to the downside. You could even actually reverse at the 61%, but once it breaks the 61%, that's where I drew this extension, or this trend line. Once it breaks the 61% Fibonacci retracement between this range, that would have been an ideal range to go long. And just another little trading idea, you can use fractals. I use fractals. So when it breaks the 61% level, at that point there, it would have been ideal going long in any one of those areas, and it would have put out some targets. You can use, I like using the percentage gains and get out with a percentage gain, or you can use any other exit strategy that you may want to prefer. But again, at the moment, that would have been an ideal area to go long in that range there, above the 61% retracement of that range there. Now just be mindful, we're reaching this key resistance area, and you can see there from the price action and also the Fibonacci, the CCI action, it's consolidating along that retracement level. Now if it breaks above that, our next level of resistance will be this diagonal trend line, and it may well continue to the upside along this diagonal trend line as well. Although if it keeps coming down to the downside, and it threatens this moving average on the hourly, and we want to see it potentially, for any potential reversal, we want to see it then break. I'll draw this other Fibonacci retracement between that low and that high. Let's assuming it keeps coming to the downside. We want to see it break the 61% level, like I showed you back here on this level, on this price range. So at the moment, it's well above that. But if it breaks to the downside, it may come down and bounce off any one of these levels. But if it breaks down to 61% level, then we're looking at possibly a further shorting environment. If it's by that stage, it'll probably break to the downside on the hourly CCI as well. So just be mindful of that as well as we move forward. So just be carefully going long. But if it can go long, especially if it breaks above these two resistance areas, that'll be an ideal area to go long if it breaks above those. Otherwise, be mindful of any further downside. It may be starting to tire a bit in terms of price action. To understand how to properly trade using the average down approach, we don't use stop losses. Reference the links in the description below. Subscribe and support us more on Patreon, and we'll see you in a future video.